just to clarify, I guess for next financial year, if you are going to salary sacrifice, answering Kim's question about how much should I salary sacrifice, it really depends on your income. Ideally, we would reduce our income so that we're not paying tax at more than 15%. And if you look at the tax-free threshold, this is for the 2012-13 financial year, it's just cut off a bit there. The tax-free threshold is $18,000, so you don't pay any tax if you earn less than $18,220. But if you include the low income tax offset, it actually is effectively $20,500. Or if you're 55 and you get the mature age tax offset as well, then it's just over $23,000 you can earn without paying any tax. So let's have a look at an example. If we've got someone earning $44,000 and they're 55 years of age, they could potentially reduce their taxable income to $23,000 by salary sacrificing $21,000 over to their super fund. And then their taxable income would reduce from $44,000 to $23,000, and I think it's around $2,275 in tax that they would be able to save. But as I mentioned earlier on the previous slide, that if you've only got one pay packet or no pay packets left for the rest of the financial year, then you can't really do much about it if you're a salaried employee. I just have a question from Keith. Currently my shirt salary pay slip uses the term fringe benefit, not exempt benefit. Can you clarify the definition of both terms? I think the term that Scott used previously, Keith, getting back to the difference between fringe benefits and exempt benefits, is that they're non-reportable fringe benefits and reportable fringe benefits. And so I'm saying the exempt benefit is the non-reportable fringe benefit, and that doesn't show up as a income from a government co-contribution total income test perspective. So getting back to how much should you salary sacrifice, hopefully that's given you an idea of how much you should salary sacrifice, but it is important that you don't go over your contribution limits. So this financial year, so the 2012-13 financial year, the limit for everybody, regardless of your age, is this $25,000. Next financial year, so the 2013-14 financial year, it goes up to $35,000 for those over 60, and then in the 2014-15 financial year, there should be an index up for those under 50. Those over 50, it should be 35, and so on. So you can see what the rates are. So when you're salary sacrificing, you don't want to go over those contribution limits because you end up paying tax at the highest marginal tax rate. And you've got to make sure that you include your superannuation guarantee contributions in those limits. If your employers put $5,000 into your super fund as superannuation guarantee contributions, then your limit ends up being $20,000. So don't go over those contribution limits.